Good morning. My name is Drew Moore. I've got Michael Reginelli and Brian Basting here in the studio with us, and we're going to rehash the May USDA WASDE report. As of right now, and these prices are fluctuating quite rapidly, but we've got July corn up 2, East corn down 4, July soybeans down 4, no soybeans down 14, July Chicago wheat up 16, and July KC wheat up 42, and certainly subject to change. But out of the gates, Brian, first question for you. What are the details behind the reports? Tell us the good news, the bad news, and everything in between.
Well, as always, Drew, there's a lot of surprises, and USDA did surprise us today on a couple fronts for the Brazilian corn crop that they're just starting harvesting now down there, a 5 million ton increase compared to last month. So picture down the road, quite a bit of corn is going to come off in August, September, and work its way into the world pipeline and compete with U.S. corn.
Right.
Therefore, USDA cut old crop corn exports, Drew, 75 million bushel in this report to 1775. So that's a little bit concerning in terms of USDA is saying that not only is China canceling old crop corn sales, but Brazil now has more corn on the way.
Sure.
And that's going to bleed over, if you will, Drew, into 23-24. When you look at the fall program, something to be concerned about from corn. For corn in the 23-24 balance sheet, Drew, 2.222 billion bushel carryout. 2.222 billion bushel. The trade was expecting 2.105, so about 120 million bushels above the trade estimate. Part of that, Drew, was linked to the fact that the USDA bumped up the yield to 181.5 for this crop that we're planting right now. That would be far and away a record. Back in last year, 173.3. So again, USDA is sticking with their Ag Outlook Forum estimate of 181.5. So bottom line on corn, Drew, strongly encourage viewers to defend your balance sheet, not only on old crop, but now looking at new crop, because we're looking at a substantial increase of nearly 900 million bushel, over 900 million bushel in carryout for next year.
Sure.
Wheat, briefly, Drew, aggressive cuts on the HRW crop for this year, 514 million bushel. That's lower than last year's crop, Drew, 531 million bushel last year.
Right.
Just a catastrophic situation. Unfortunately, in Oklahoma, USDA is under 50 million bushel for Oklahoma, under 200 for Kansas. So just a terrible situation with the drought. Right. And an increase in abandonment out in the western states. So a very rough situation there. The good news for wheat, at least from the standpoint of production-wise, soft red crop, 406. That's a healthy crop. Drew, last year was only 337. So really got diametrically moving in different directions between hard red winter and Chicago soft red winter. And I think that would carry over into the balance sheets, obviously, for 23-24.
Sure.
A pretty comfortable balance sheet for 23-24 wheat on SRW, extraordinarily tight on HRW at this point. Just briefly on the world scene, Drew, we're looking at the first estimate from USDA for wheat in 23-24 in Ukraine, only 16.5 million tons, Drew. Last year was 20.9, and I'd backtrack just a second here and wrap things up on corn for next year. Again, with the war going on with Ukraine and Russia, 22 million tons for Ukraine, 27 last year. Here's a key point though, Drew, offsetting some of that Brazil situation. Exports from Ukraine next year, corn, 16.5, this year, 25.5. So it's not all doom and gloom from the standpoint of if Ukraine does back off exports, that's some hope there. But I just remind the viewers, a lot at stake here, and you still got a long way to go in this growing season, but defend that balance sheet.
Sure. It's been a few years since we've had a 2 in front of the carryout. So that's
Number of years.
Interesting. Thank you, Brian. Michael, what about the soybean side of the ledger?
Yeah, they didn't make massive adjustments on the old crop side. They bumped carryout from 210 million to 215. Didn't touch the demand side of the ledger. That's all related, just a slight uptick in imports. Our balance sheet is a little bit higher than the USDA, so they're operating with a 215 carryout for this year, this marketing year that ends at the end of August.
Sure.
I think our research is closer to 240, so 25 million bushels higher. New crop looked pretty good for the 23-24. The ending stocks quite a bit higher than the prior estimate, 335 million. Again, our internal thoughts are probably 20 million higher than that. Bigger carry in, bigger carry out on the back end.
Sure.
So those are kind of the key takeaways. They left the yield unchanged at 52, just slightly higher than the average trade guess. World bean stocks, Brian noted, were pretty large, 122.5. That's mostly due to a rebound, or expected rebound, I should say, in Argentina production. Average trade guess was 103 there, so pretty hefty. That's likely going to help lean on this bean market a little bit.
Sure. Thank you for that. Speaking of beans, Brian, South America, Michael touched on this a bit, but from the production side of things, weather forecasts, tell us a bit about what's going on in South America.
Two things to think about there, Drew. Number one, the crop in the northern part of Brazil right now is filling grain. So although it's getting drier there, it's not going to impact that production estimate. That's why USDA probably went with a 130 today in that production estimate. Although it's getting dry, that's seasonal in Brazil. Probably keep an eye on the potential for frost in the southern parts of Brazil. Obviously they're into fall down there. You have to keep an eye on that. But having said that, the weather trends short term remain favorable for grain fill. It's not an excessively dry, it's not a drought. There's plenty of subsoil moisture in the northern Brazil area. So that's the reason the USDA bumped up that crop estimate for Brazil and corn. The other thing to keep an eye on, though, Drew, is on the further south in Argentina. It is dry in Argentina, and they're trying to plant wheat down there. So historically, some La Nina trends, which are switching over from La Nina now to El Nino worldwide, may suggest a drying trend in southern Brazil, and more importantly in Argentina, which may mean a problem with a wheat crop in Argentina. And I'd add one more thing on the wheat side, switching briefly over to the Australia situation. El Nino means dry weather in Australia historically, Drew. So that's something to keep an eye on for the wheat market. But South American weather trends right now, the bean harvest is in the bin and the corn harvest is just getting started, and it looks favorable right now.
Yeah, Australia's had 2-3 years of really good crops on the wheat side.
They've really benefited, Drew, from La Nina, which is a wet pattern. As you switch over historically from La Nina to El Nino, it gets dry in Australia, so it's something to keep an eye on.
Thanks, Brian. Michael, let's talk about cash markets and spreads here a second. July forward spreads and corn and soybeans have both had a pretty volatile week alone, let alone the last month. But what are your thoughts here after seeing the USDA numbers and looking at cash markets daily?
Sure. I'm not sure the USDA numbers really changed the landscape or any of our thoughts. Slightly higher carryouts. Sure. But it really comes down to availability in the pipeline at the moment. The other thing is timing. We have a month and a half, 6-7 weeks before first notice day July futures to give time for those cash markets and spreads to really come together. Right. The question is going to be, or the job of the market from a demand standpoint is going to be driving those bushels wherever they are, whether they're in commercial hands at the elevator or whether they're sitting in farm bins, to move in the next 6 to 7 weeks. And the mechanisms that'll make that happen is higher basis, higher spread structures. That's, in the third leg of a bull market, tends to be flat price. Haven't seen the flat price as it's fallen out of bed. That's actually shut off farmer selling. What we're seeing on the back end of that is slightly higher domestic basis. Values for corn and beans are both starting to elevate a little bit, given the lack of farmer movement. Farmers had a built-in kind of distraction from planting in April, even throughout May. So any old crop bushels that are still out there, that'll kind of be the next key is timing of what it takes to move those bushels to market. And so right now, cash value is still pretty firm, supporting higher spread structures. Carry out on papers getting bigger for corn and beans wouldn't necessarily indicate that. In theory, we should be more comfortable. The market's not necessarily behaving that way. So those are the things that we're kind of watching. It's logistics, it's timing of farmer movement. End users, I think, have a pretty widespread variance of coverage right now. Ethanol margins have rebounded to some degree. I think coverage is somewhat scattered. But then there's also demand concerns too. We're seeing pretty heavy pressure on the export side, specifically for corn in lieu of recent cancellations. The hog margin environment is extremely difficult. Poultry's not great too. Lowest cattle numbers on hand in at least 50 years. So it's not overly optimistic, but really it's going to come down to the cash markets, just defining how much open demand is out there, how good is the coverage, and then trying to time the next round of farmer movement if we're going to meaningfully break or weaken these spreads.
Sure, perfect. Thank you very much. That's quite helpful. Brian, across the pond and also here domestically, but tell us about the grain corridor agreement that expires here on the 18th. It sounds like there's no agreement in that within the Black Sea yet, and then also if you could touch on the HRW crop out west here in the U.S., that'd be helpful.
It's a very fluid situation, Drew, on the grain corridor agreement. Talks are continuing as we speak here, but time is running out. The agreement expires, as is written today, expires May 18th. So less than a week to go.
Right.
Very critical to see how that evolves, because that's the only way the grain has been moving out of the Black Sea, is via that agreement. We'll just have to see how that shakes out. I'd add a couple tidbits worldwide. The crop size looks very good right now in Europe. Crop potential looks good so far in Russia, China, those areas. There are no concerns in the northern hemisphere to this point, with the exception of the hard red crop, as you just mentioned a moment ago. Right. Catastrophic situation with the hard red crop. We're going to see some dynamics we've never seen before, Drew, in terms of the spreads, for example, in Kansas City are a historical premium to the Chicago SRW futures.
Should be a record right now, probably.
It is a record as we speak here. It's unprecedented to see what's happening, because you've had back-to-back devastating droughts for HRW, unfortunately.
Right.
I think that going forward, we're not seeing that reaction in flat price as such. A little bit of a rebound, obviously, today, as you highlighted a moment ago. But it reminds us how burdensome some of the competitor supplies are. Europe, at the moment, Australia, some of those areas. One fly in the ointment I mentioned earlier, though, is what we're going to see in the southern hemisphere going forward as we plant those crops in Argentina and Australia. Will those drying trends continue? Because that really changes the balance sheet, Drew, a lot if we get a problem in Australia and or Argentina in terms of opening up some export opportunities for the U.S. Otherwise, Drew, the USDA has us all the way down to $7.25 on exports for wheat for 23-24. That would be the lowest number probably since the 1960s. I didn't even check my database yet. But so a lot of competition, a lot of volatility, though, in intermarket spreads. I think Michael would be able to speak to that far better than me, but I know Kansas City relative to Chicago is historical premium. But it's going to be an interesting situation. One final note on that I'd add, Drew, I think we're going to see some wheat feeding in the southeast. Some really good crop potential down in North Carolina.
Sure.
If this corn basis, and again I would defer to Michael, were to remain, encourage, if you will, wheat substitution for corn, we've got the supply of SRW available. And not only in the U.S., but not feeding necessarily, but up in Ontario, they've got a good soft red crop coming on too.
Sure.
So
Sure.
Soft red, ample supply. HRW, unfortunately not.
Not so much. Understood. Thank you, Brian. Michael, last question for you. Fairly large corn short that was established last week that was reflected on the last CFTC Commitment of Traders report. Chicago wheat, kind of the same dynamic, but that's been there for a bit. I mean, what do you expect from the managed money side, and is that going to cause some fireworks here as we get into the summer?
Very well could. As you noted, they've piled on the short side of this thing in short order, and I mean the board has felt it. We've taken 60, 70 cents out of corn.
Right.
Looking at July futures in the past month. So I mean, funds are running a hefty short in corn right now. I mean, we'll get updated commitment of traders data this afternoon. If you run it on aggregate, best estimates are they're short around 125,000 before today on corn, probably closer to 150 on wheat. So big short positions to your point. Now the caveat is if we get any type of bullish news, any type of stress out there, short covering could help prop this market up a little bit too. So the heavier they get short, the more exposure they're warehousing, it could potentially lead us into a bit of short covering at some point in time. But right now it's heavily pessimistic views as they've piled on. But that's kind of the volatility crux. They're running long positions in beans, long positions in meal, short a little bit of oil. So on the oilseed side, still a little bit more friendly from a managed money standpoint,
Sure.
But they have really packed it on. And Brian hit it on the head. From a wheat standpoint, there's just a massive disparity, one like we've never seen before between classes of wheat. You got just really solid prospects in the U.S. and Ontario for SRW. Demand's well covered, somewhat limited, no export demand to speak of. Meanwhile, the hard red wheat is struggling. So corn and wheat spread will be something interesting to watch too. You know, it's been ranging between 30 and 70 cents.
Right.
Somewhere kind of towards the middle of it, at least it was when we walked into this room. But but it's so that's something to watch as we kind of look at feed demand, because soft red honestly needs some demand right now. You're looking at the highest carryout estimate in at least 5 or 6 years.
Sure. Very good. Very good. All right. Thank you both for your time today, and thank you, viewers. If you have any questions, feel free to send them over, and have a great weekend and rest of your day.